Most traders believe that success comes from planning more. More charts, more indicators, more scenarios, more rules, more backup rules for the backup rules. The assumption is simple. If I just think harder, prepare deeper, and map every possible outcome, I'll finally be safe from uncertainty. But the market has a cruel way of punishing that mindset. Because in trading, the people who plan the most are often the ones who freeze, hesitate, second guess, and miss the very moves they were preparing for. Meanwhile, the traders who plan less often end up winning more, not because they're careless, but because they understand something fundamental about how markets actually work. The uncomfortable truth is that the market does not reward intelligence the way school does. It does not reward preparation in the way a job interview does. And it definitely does not reward overthinking. Markets reward clarity, decisiveness, and emotional control under uncertainty. Excessive planning feels productive, but in reality, it often becomes a psychological crutch. It gives the illusion of control in an environment that cannot be controlled. And that illusion quietly sabotages performance. When traders plan too much, they don't reduce risk, they multiply it. Each added scenario becomes another mental branch that competes for attention in real time. Instead of seeing what is happening, the trader is constantly comparing reality to a dozen imagined outcomes. Price moves, and instead of acting, the mind asks, which plan is this? That hesitation is costly. By the time certainty arrives, the opportunity is gone. The best traders understand that trading is not about predicting the future. It's about responding to the present. Planning less doesn't mean being unprepared. It means stripping preparation down to what actually matters. It means defining a few high-probability behaviors and executing them consistently, instead of trying to outsmart the market with complexity. One of the biggest misconceptions in trading is that more information leads to better decisions. In reality, more information often leads to slower decisions. The human brain has limits. It can only process so much input before performance degrades. When traders overload themselves with indicators, timeframes, news, correlations, and hypothetical outcomes, they don't become sharper. They become noisier. Noise clouds judgment. Simplicity sharpens it. Think about how elite performers operate in other high-pressure fields. A professional athlete doesn't consciously plan every muscle movement during a game. A surgeon doesn't run through every possible complication mid-incision. They rely on training, pattern recognition, and a small set of principles executed at a high level. Trading is no different. The moment you try to consciously manage everything, performance drops. Overplanning also creates emotional attachment. When you spend hours crafting a detailed trade thesis, you don't just place a trade, you place a belief. And once a belief is involved, objectivity disappears. The trader becomes invested in being right instead of managing risk. Stops get moved, losses get justified. The plan, ironically, becomes the reason the trader can't exit when they should. Traders who plan less avoid this trap. Their plans are simple, flexible, and disposable. They don't fall in love with ideas because the ideas aren't elaborate enough to fall in love with. A simple setup triggers. Risk is predefined. Execution happens. If it fails quickly and cleanly. No drama, no identity attached. Another hidden cost of excessive planning is fatigue. Decision fatigue is real, and trading amplifies it. Every additional rule, condition, and scenario drains mental energy. By the time the best opportunity appears, the trader is already exhausted from thinking. This is why many traders miss the cleanest trades of the day. They're mentally burned out before they even arrive. Planning less conserves cognitive energy. It keeps the mind fresh for the moments that matter. Instead of analyzing non-stop, the trader waits, observes, acts only when conditions align with a small, trusted framework. This creates a rhythm that is sustainable over months and years, not just a few intense sessions. There's also a deeper psychological reason why planning less works better. It reduces fear. Fear thrives in complexity. When there are many possible outcomes, the brain defaults to worst-case scenarios. Overplanning feeds that fear by constantly reminding the trader of everything that could go wrong. This leads to hesitation, smaller position sizes than intended, or avoiding trades altogether. Simple plans are easier to trust. When you know exactly what you're looking for and exactly how you'll respond, fear has less room to operate. Confidence doesn't come from certainty about outcomes. It comes from certainty about process. Traders who plan less focus on controlling what they can control: entry criteria, position size, and exit rules. Everything else is noise. Another reason less planning leads to more wins is adaptability. Markets are dynamic. Conditions change. Volatility expands and contracts. Trends emerge and die. A heavily planned trader is rigid. Their plan was built for a specific imagined environment. When reality deviates, they struggle to adjust. They either force trades that no longer make sense or freeze because the market isn't behaving according to plan. A lightly planned trader adapts effortlessly. Because their framework is simple, it can flex with changing conditions. They aren't attached to a specific narrative. They're reading what's in front of them. This adaptability is one of the most underrated edges in trading. There's also an execution advantage. Trading success is not determined by how good your ideas are. It's determined by how well you execute them. Overplanning shifts focus away from execution and toward analysis. Traders spend more time refining plans than practicing execution. Then, when it's time to act, they stumble. Traders who plan less spend more time mastering execution. They know exactly how they enter, how they exit, and how they manage risk. These actions become almost automatic, and automation, when built correctly, outperforms conscious effort under stress. Another paradox of trading is that confidence often comes after simplicity, not before it. Many traders wait to feel confident before simplifying. They think complexity makes them professional. In reality, simplicity is what professionals graduate to. They've already explored complexity and learned that most of it doesn't matter. When a trader reduces their plan to its essentials, they begin to see the market more clearly. Patterns repeat. Behaviors become obvious. The market feels slower, not faster. This clarity builds confidence organically, not the loud, fragile confidence that collapses after a loss, but a quiet, durable confidence grounded in repetition. Planning less also improves learning. When your strategy is simple, feedback is clean. You know exactly why a trade worked or failed. When your strategy is complex, outcomes become ambiguous. Was it the indicator, the time frame, the news filter, the correlation? Learning slows down because cause and effect are obscured. Simple plans accelerate growth. Each trade teaches a clear lesson. Adjustments are easier to make. Progress becomes measurable. This compounding effect is powerful over time. There's a reason why many consistently profitable traders can explain their strategy in a few sentences. Not because they're hiding complexity, but because there isn't much complexity to hide. They've stripped away everything unnecessary. What remains is robust, repeatable, and resilient. Another key point is that planning less reduces emotional swings. Big emotional swings often come from big expectations. Overplanned trades carry big expectations because so much effort went into them. When they fail, the emotional impact is amplified. This leads to revenge trading, self-doubt, and burnout. Simple trades carry simple expectations. You're not expecting perfection. You're expecting execution. Losses are smaller emotionally and financially. Wins are not euphoric. They're routine. This emotional neutrality is where consistency lives. Many traders resist planning less because it feels uncomfortable. It feels like giving up control. But trading is an exercise in controlled surrender. You control your risk, your behavior, and your process. You surrender everything else. The sooner a trader accepts this, the faster their performance improves. Planning less also encourages patience. When you're not constantly adjusting and recalculating, you're more willing to wait. You're not forcing trades to justify your preparation. You're allowing the market to come to you. This patience filters out low-quality setups and improves overall win rate. There's a misconception that traders who plan less are impulsive. In reality, they are highly disciplined. Discipline doesn't come from complexity. It comes from commitment. Commitment to a simple process repeated relentlessly. Another advantage of minimal planning is scalability. As position size increases, emotional pressure increases. Complex strategies tend to break down under size because execution errors become more costly. Simple strategies scale better because they reduce cognitive load and emotional interference. Planning less also helps traders stay in the game longer. Burnout is rampant in trading, and overplanning is a major contributor. Constant analysis, constant adjustment, constant mental effort. It's exhausting. Simplicity is sustainable. The irony is that most traders already know what works for them. They've seen patterns. They've had success with certain setups. But instead of doubling down on what works, they keep adding layers, thinking the next tweak will unlock consistency. It rarely does. Consistency usually comes from subtraction, not addition. The market doesn't care how sophisticated your plan is. It only responds to supply and demand, behavior, and emotion. Traders who align with that reality and keep their plans aligned with it perform better over time. Planning less forces honesty. You can't hide behind complexity. You can't blame a loss on a misunderstood indicator or a rare market condition. It's just you, your execution, and the outcome. That honesty accelerates maturity. As traders simplify, they often notice something surprising. Trading becomes boring, and that's a good sign. Boring trading is consistent trading. Excitement is usually a symptom of risk mismanagement or over-involvement. Winning traders don't wake up excited to trade. They wake up prepared to execute a process. They don't feel heroic after wins or devastated after losses. They stay level. Planning less supports that emotional equilibrium. Another important aspect is trust. Complex plans are harder to trust because there are too many moving parts. Simple plans are easier to trust because they are transparent. You know why you're in a trade and why you're out. Trust leads to consistency. Planning less also improves timing. When the plan is clear, entries are cleaner. There's no waiting for one more confirmation, no second guessing. The trigger hits, and the trade is taken. Timing improves, which directly impacts profitability. Many traders fear that planning less means leaving money on the table, but in reality, overplanning often leaves more money on the table through missed trades, late entries, and early exits driven by doubt. The goal is not to capture every move. The goal is to capture your move, the one you understand, the one you've practiced, the one that fits your psychology. In the end, traders who plan less win more because they align with how humans actually perform under pressure. They respect cognitive limits. They reduce emotional interference. They prioritize execution over prediction. They understand that trading is not a puzzle to be solved, but a process to be executed. And processes thrive on simplicity. So if you're struggling, the answer might not be another plan. It might be fewer plans, fewer indicators, fewer scenarios, less thinking, more doing. Strip your approach down until it feels almost too simple. Then trade that. Refine it. Trust it. Execute it. Because in trading, clarity beats complexity. Execution beats intelligence. And the traders who plan less often win more.